Ladies and gentlemen, good day and welcome to Investor Call to discuss financial results for the quarter and 9 months ended December 31st, 2024 conference call, hosted by PNGS Gargi Fashion Jewellery Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Neha Boyd, Company Secretary. Thank you, and over to you, Ms. Neha.
Thank you. Good afternoon, everyone. This is Neha, Company Secretary and Compliance Officer of PNGS Gargi Fashion Jewellery Limited. A very warm welcome to all. For discussion, we have here with us today Mr. Amit Modak, our Director, and Mr. Vishwas Thonrao, our Chief Financial Officer. Welcome, everyone. We wish to start by qualifying that during the call, we may make some forward-looking statements. PNGS Gargi does not provide any specific revenue earning guidance. Anything which is said during this call, which may reflect our outlook for the future, or which may be construed as a forward-looking statement, must be reviewed in conjunction with the risks that the company faces. These statements are considering the business environment we see as of today, and therefore there could be a risk and uncertainties that could cause actual results to vary materially from what we are discussing on this call today. An audio link and transcript of this call will be shortly available on the investor section of our website, that is www.gargibypng.com. With this, we are now ready to begin with the opening statements and the performance of the company. And post that, we will be available for the question and answer session. I now request Mr. Amit Modak, sir, to take over. Over to you, sir. Thank you.
Thank you, everyone, for joining the call. Very good afternoon. Valentine's Day is coming near. Our industry's most popular festival is coming near, so we all are happy. In every call earlier to this call, everyone was asking about 100 crore, 100 crore and 100 crore. Sometime I utter that word when we were not listed and we were not regulated. But that word was taken on record by all investors as my a commitment. I am happy to see that I have delivered that 100 crore. But along with that 100 crore completed turnover, I had given you all the explanatory statement also to what extent it is actually B2C and to what extent it is B2B, that is a franchisee operated, franchisee owned model franchisees. If you go through our all performance, which is there till the time of 31st December 2024, you will find and you will be happy to see that company is performing well. I myself is happy with the performance. You all must be happy with the performance. And we will continue with the same gist and same progress in near future. We are in the expansion mode right now. We are in the growth status. Just 30 months old company is there, and so we are growing step by step. We are expanding step by step. At the end of 31st January, we have got EBOs of 10. Then we have got PNGS locations 31. They have got SIS on the FOFO model basis. Then we have got Shopper Stop SIS 38 and one more location which is in one museum which is also on the FOFO basis, and that is a 1 unit. So total location, if we sum up, those are 39 plus 1, that is a 40, 30, 70, 70, 10. 80 locations are there right now, which are carrying out the business. And from those locations, we are getting all these outputs. I had in earlier meeting also said that we are going to open certain locations during the AGM or during the investor call, I said, and 2 out of that, those are coming up in next 15 days time. One is at Gurgaon, which is Haryana state, and one is at Madhya. Third one we at Aurangabad, now Sambhajinagar, new name is Sambhajinagar. Then we are expanding our Lakshmi Road brand shop from 100 square feet to 1200 feet, which is with 200 our exist. Am I audible now?
Loud and clear. Go ahead.
Yes. Okay. So all these 4 locations will take place before 31st March. Subsequently also we will be growing because PN Gargi Sons will have 2 additional locations, one at Thane, Gokhale Road, and one at Lakshmi Road. Recently we have started PN Gargi Sons location at Talegaon, which is SIS. And all these locations will start contributing mainly during next year because current year's last 2-3 months it has started. Season Mall recently opened 3 days back. Earlier to that there was a Pimpri Saudagar which was opened. And so recently opened showrooms are there, and so those showrooms will contribute to the business in the coming near future. This industry, that is a fashion jewelry industry, is growing almost at 25 to 30% CAGR. And if you look our turnover right now this year, it has surpassed the thing. But yes, all days are not same days forever. But I can promise you, or I can foresee that we will perform as per the market growth potential, that is a 25 to 30% CAGR. Secondly, every year PN Gargi Sons will also keep on adding locations to their showroom. So we will get that additional showrooms year after year available for the SIS with the PN Gargi Sons. But that is a passive thing because it is not within our control. So whatever they will expand, we will definitely. But on our own, at least another 10 locations will get added in FY26. I am talking about FY26 because current year's 4 remaining locations I have already explained, which are going to be completed by March 25. New products are added. 14 karat gold plus diamond already added in last Diwali. On 5-6 days back, we have launched our new product range, which is called as a Utsav, which is a costume jewelry, purely costume jewelry made out of copper and brass. And for that, it's only right now available on the online. The top line contribution from that segment is not yet materialized in our top line. It will get mainly contributed in FY26. This year, for last 2 months, it will contribute, but we are not knowing exactly what is the potential. Market potential is there, but acceptance to our product and our price range will be seen in next 2 months' time, and we will accommodate accordingly if any changes are required to be done. We see that PN Gargi Sons, apart from PN Gargi Sons, without depending on them, we will complete at least 100 locations by end of FY26. That is, during FY26, we will have count of 100. Right now, we have count of 80. So another 20 locations, it may be a brand store, it may be a SIS of the shopper stock, or it may be in some or other form with some or other brand as a hands-in-hand locations for the selling our product. Strong backing is there from the PN Gargi and Sons, the company which has got more than 8,000 crore rupees turnover, and we really require to thank them for their support in our entire journey and creating market for us. Shopper stock in FY25 at end, we have got almost 38 right now, and we will close around 40 by end of the year, and another 4 to 7 locations will get minimum added in next financial year. Because we have almost completed all their good performing locations. They have got more locations or more than 100 or 150 locations, but we cannot go at their every location because it requires to be good for us to sell our product range. This time in this call, I will say that by 2027, that is FY28, not 2027 FY, it is FY28, we can see our top line reaching around 200 or 200 plus crore rupees if everything goes smoothly and if everything progresses smoothly. I generally promise and deliver. I generally promise and deliver more, and that is the experience of the investor as well as my all associates. They always say, "If ummid se zyada." Yes, I want to deliver that way only. So you may find me conservative while speaking, but I am very aggressive while executing my business. And we have seen that in the figure number of FY25 first 9 months as well as FY24 ending. That the time when we entered the market in FY23, that is December 22, that time our entire balance sheet was of 30 crore. And this year, in first 9 months, we have achieved profit after tax of 23 crore. So that you can compare it. We made one preferential allotment in September 2024 at the rate of some 565. I am not remembering exact rate, but it was near to 565 rupees per share. And amount collected was around 47 to 48 crore rupees. And that amount was mainly for the expansion purpose, inventory investment purpose, and marketing purpose. Now we are spreading pan-India. Indore is in Madhya Pradesh, Gurgaon is in Haryana, Delhi is there. Then we are there in the Telangana, we are there in the Karnataka. So we will need to require more funds for the marketing spend. And in that preferential allotment, I had explained to all investors that out of their total contribution, I will spend at least 10 crore out of that on the marketing on pan-India basis. And I can tell you that around 1.5 crore rupees I have spent on the marketing, and that is giving me good returns as far as sales figures are concerned. Yes, for purpose of utilization of those funds are getting utilized, but I am very conservative and I am conducive, you can say, for utilizing the money. But yes, when it is given by the investor, I will use it, but very carefully, because I want to give them returns on their money and not just use their money because they have contributed to me. I can promise you that your company will never be in red, and it will always give all figures in black and never be a cash burning, always be a profit making and creating a profit. As I always say, I am not in hurry in the number, but yes, I proved that by look whatever number I told you in some news item, I have completed that. Same way I can say you that FY28 you will see minimum 200 crore or more, and that will be a commitment, and at any point of time you will find that number is going to happen and going to be on the paper in a black again without a loss. We are there in a growth mode, and you will see a good progressing company and good company with good investor. Their hard-earned money will be used very carefully by the management for only and only for the purpose of business. This time I am giving you more time for the question answer, because question answer means a lot, because whatever I will say, it will be a one-sided, rather than if I get questions from you, I can answer your precise inquiry or the query, and that will deliver you more information and which is sought by you. Thank you for listening, and you can continue with raising your question one by one. Moderator will release the question and you can ask the question. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Kiran Paranjpe, an individual investor. Please go ahead.
Hello, this is Kiran Paranjpe. Can you hear me?
Welcome.
Okay. Congratulations for a great set of numbers.
Thank you, sir.
As an investor, we are really pleased with the progress PNGS has done in the last 6 months with your guidance and support from Mr. Gargi and PNG and Sons. So as an investor, we thank PNG and Sons for their support. I have a couple of questions. My first question is related to your material cost as a percentage to sales. If I see last year or last quarter or before that, it was about last year it was about 60%, now it is about 57%. So is that driven by the product mix, which is diamond-studded jewelry sales, or is there some other reason for that?
It is a product mix plus the size of operation, because economies always works. Higher the procurement, lowering of the cost, direct, indirect cost, and getting a good deals in the market. That may be the major reason, and that is the main reason.
Okay. So can we assume that this percentage would roughly remain the same going forward or may reduce further?
So there are 2-3 chances that silver jewelry getting many times imported, that accessories getting imported and then fabricated in India as a jewelry. So if any import policy change, and if any additional tariff is levied on those imported items, which are mainly coming from China, Thailand, Indonesia, then that may impact to certain extent to the price and to the cost. But I don't think that it will be a major impact, and we will try to see that it will get maintained or nearby 1 or 2% plus or minus.
Okay. Thanks for that. Our next question is related to your finance and depreciation for this quarter as compared to last quarter. The depreciation has jumped about 50% and finance costs have jumped by about 3 times. So just wanted to know what was the reason for that.
No, I don't get how you are calculating that 3 times from 7 lakh to 20 lakhs.
Just give me a minute, I'll tell you.
Up to H1, it was 7,82,000.
No, I'm seeing September quarter versus December quarter. The finance cost September quarter was, as December quarter is 12.26. So it's about 4 times roughly.
And September quarter?
September was 3.28.
3.28. It is finance cost includes that credit card commission, and during festival season there is a many debit and credit cards are coming in, and larger the sale, larger the card usages, those costs are going up. Those costs are not going up because we are borrowing or anything. We have got ample resources lying in the bank. If you are looking to my other income, you can make it out.
No, but I have a query about that. Since now we are moving mostly on a FOFO model, which is franchisee-owned, franchisee operated, that means that we are transferring the goods to our franchisee, and franchisee is selling good to the individual retailers. So in that case, I was wondering how come the credit cost impact is borne by us.
But it is almost 50-50, sir. Only PNGS Gargi locations are transferred to on the FOFO basis.
Okay.
Others are still on my company's side.
Oh, okay. That's the reason. And what about depreciation? It has jumped. It was 15.6.
Depreciation because there are certain assets which we create at our franchisee location. Plus, there is a back-end office expansion is there due to that diamond and increasing inventory management due to additional location. So that back-end expansion has happened in Q2 and Q3, and that depreciation is charged there.
Okay. Okay, thanks for asking those.
Still, you will find it's a very asset-light model. If you go and see the total block, fixed asset block, it is very low. It is just 1.5 crore.
Okay, thanks. Another question is related to the diamond which we buy. Now, we take pride that we use only natural diamond. My question was related to how do we ensure that these are not conflict diamonds?
No, those are getting certified by GI, IGI.
Okay, they follow the Kimberley process certification?
No, that technicality I don't know. IGI is following certain processes which are market accepted, and on that basis only we are taking their certification, and Gargi is regularly enrolled with the IGI for certification.
Okay, thanks. Next question was related to during AGM we mentioned about hiring of CEO and COO.
We have already
progress on that.
I will address you. We have already appointed 2 persons, one for exclusively looking to North India and expansion there because many shopper stops happened there. Then Delhi had happened 2 months back. Then Gurgaon is happening right now. Then Indore is happening right now. We have appointed 1 person as an assistant manager for the franchises and SIS servicing. Plus, we have appointed 1 in-charge manager at the head office who is looking and taking care of entire distribution and the retailers' channels. And he is taking care. We have already appointed 2 people. And by May, we will have CEO or GM in the place.
Okay, by May 25.
Yes.
Okay. My last question is related to another thing which we discussed during AGM was about 9-carat gold hallmarking and a possibility of us selling those 9-carat gold jewelry. Can you please update us on that?
No, still government has not approved that request from the industry for adding 9-carat in the list of the BIS approved hallmark caratage. As on date, it is only 14, 18, 20, 22 and to some extent 24 carat.
Okay. So government, it's still pending with the government, yeah?
It is still pending. Once it is clear, then we can create a bank of the designs and start thinking about the selling. But with the increasing price of gold, it is very likely that very shortly government may think about it.
Yeah, that's the exactly reason I was wondering because gold prices keep going up. So 9-carat would be very affordable for everybody.
Yes.
Okay. Thanks a lot for answering my question. All the best.
Yes. Thank you.
Thank you. Next question comes from the line of Samir, an individual investor. Please go ahead.
Congratulations on the performance so far.
Thank you.
My question is more strategic. If you consider the number of stores that we have, so far we have done a great job because large amount of revenue was coming from the PNG SIS, where we were getting the inbound customers of PNG store itself. And then now we are expanding, and without Reliance, you said that you will expand to 20 stores by FY26, 20 additional stores by FY26. So my question was, what would be the growth from these 20 new stores to the top line of, let's say, FY25? And what would be the same stores sales growth from the current lot of SIS stores? And because shopper stop and franchisee stores would be lesser, right, in terms of revenue per store.
See, predicting the additional sale from the upcoming store is a very tricky thing. We cannot predict hard and fast. I can predict top line for my entire entity, but I cannot predict top line for that specific additional number of stores and new stores which are upcoming. And Shopper Stop, yes, it is a very small contribution, but it is a very cost-effective contribution for the business. And their locations, earlier period, like last year period, it was less than 1 crore rupees contribution. This year, in first 9 months, they have contributed more than 2 crore rupees. So their contribution will increase as days will pass, and I am confident that Shopper Stop will have sizable contribution in total thing. 20 location you said, out of that, as I said, 10 will be the branch store and 10 will be the SIS with some or other. It may be with PNGS, it may be with the Shopper Stop, or like other brand stores, multi-brand stores. So that will come from there. So exact targeting or predicting 26 top line, with including these 20 new locations, it is little bit difficult task for me as such. It may be possible for others, but for me, it is a little bit difficult task, and I don't want to promise anything which is not known to myself. So how I can promise you something कि falana turnover I can derive from these 20 new locations.
Understood. And what would be like the current set of PNG SIS stores, which is driving the significant, I mean, which constitutes a large chunk of revenue? What percentage would you see them growing in the future, and what percentage they have grown in the last 1 year, say?
See, right now, the percentage-wise, if you see that PNGS, their store, they have got 31 locations, and I have got B2C sales. I have got B2B sale to them. But if I will say a B2C sale, in B2C sale, they are contributing around 83 to 85%.
And about the growth, from the growth aspect, do you see them growing at least 10-15%?
They are growing at more than 20%.
And you expect them to grow at 15-20%, maybe one or two?
No, again, I am at the same side.
Understood.
Predicting something which is a fantastic, I can say, yes, they can grow around 10% next year. But that you will take as a negative thing, because earlier they have grown at 20%. Next year they may grow at 25% also. But predicting something, it is very difficult. What will the growth? I am predicting on the long-term basis. So I have predicted on FY28, you will see 200 plus crore top line. And accordingly that bottom line will be in the proportions, growth will be there. So on that basis, you can see what growth I am expecting. But I cannot give you any precise commitment that what growth will be there.
That's right. And my last question is on margin profile for SIS PNG business and the rest, the EBO slash, let's say EBO business. What would be the margin profile in both these segments?
It is near to each other. There is no vast difference.
Understood. So total EBITDA margin would be, let's say, similar kind of profile for both
Yes,
segments.
yes.
Understood. Thank you. That's it.
Thank you. Next question comes from the line of Pibor Halan, an individual investor. Please go ahead.
Am I audible?
Yes, you are audible.
Yeah. First of all, congratulations for a excellent set of numbers. These are actually kind of one of the best industry benchmarking numbers. My first question is that can we expect that you would maintain the margin that you had reported in the last quarter, both at an EBITDA level both at a gross margin, EBITDA and a PAT level? So you had reported gross margin of 43%, I believe, PAT of 25 and EBITDA of 32. Can we expect this kind of numbers in the future also?
Hardly 1 or 2% plus minus will be there.
Okay. Thank you. My next question is, can you give a sales mix from your PNG SIS, Shopper Stop SIS, your own website, and Amazon. What is your current sales mix in the last quarter?
Online sale is 4%, zero cash burn.
Okay. And what about Shopper Stop SIS?
Shopper Stop SIS is almost 4% of the total sale. Again, there is a very cost-effective model is there. I am getting certain fixed margin because I am transferring stock to them. I am getting space and marketing everything free from them. And there is a targeted TG customer which is coming inside the shop of Shopper Stop. Is my customer only because it's mainly Shopper Stop sell woman-centric commodities, the articles or the fashion, and my product is matching to it, and I need to spend only the HR cost in Shopper Stop.
Understood. And what is your current sales mix from your own store?
Means other than PNGS and Shopper Stop and all these things?
Yes, from your own branded store.
It is 12%.
12%. Okay. So my question is, see, we have PNG from the strategic point of view, from the next year onwards, as we have almost, I think, done the SIS agreement for all the PNG stores. The only lever of growth that I see is adding up own stores, right? And the 10 number of stores that you have pointed out from the own stores, that looks to be the main source of organic kind of a growth, other than if there are any increase in the same store sales growth. Because we are probably not adding any products that you have said. We have already added Utsav and correct. So what is our strategy of, I am not able to understand the utilization of 45 crores. You have raised the 45 crores, but I do not see that being utilized for the growth right now. Correct me if I am wrong.
See, if own stores I need to expand on my own funds, if franchisee is not coming there for the brand store, then I need to invest almost 3 to 5 crore rupees per store, including the diamond jewelry inventory. Secondly, I need to invest more on the back-end inventory as number of stores will go on growing. And this money, I will see that utilization will be completed in next 18 months' time and will start yielding for the business of the company. But at the same time, I will not recklessly start investing money just because it is in my hand.
So you may not, I'm not saying that you should recklessly start spending money, but the guidance that you have given of 200 crores for FY28, that means you are factoring only some 30% growth year on year, which is almost in line with the industry growth. Whereas you have reported kind of 100% growth for the last 2 years. So are you saying that you are going to do much worse off than you have done in the past 2 years? And you would be not gaining market share, you would be but just maintaining market share.
I cannot quantify you. But I have given you the minimum number which I am likely to achieve in FY28. You may see that earlier also, or you may see very large number, higher number in FY28 than committed number. And how that growth will come, it depends on what opportunity will come to me. If some good opportunity is coming through the franchisee model, I will not unnecessarily invest the money just because I have got that money in my hand. Because I am there for doing the business. If opportunity is good and giving me good returns without investing money, I will prefer that. Just because money is there, I will not invest it, and I am not in hurry. I am getting franchises, so simultaneously I will go for my own store also and start investing that money. Because money is there, I can start additional store. Their location is required, good marketplace is required, then only I can start my franchise there or the store there. You can see that all the stores are happening stores and making money for me, money for the company, money for your company and your money. So I want that to be maintained. Just opening the store and if it is not performing, it doesn't mean anything.
And what is your current ratio of this 14 karat gold studded with diamond of your overall sales?
Overall sale with the studded to the silver jewellery. Silver jewellery is 48% and 43% is diamond.
And what is the gross margin of silver jewellery and this studded jewellery?
We are not calculating, we are treating it as a one single segment.
That is okay, but the product is different, no? So,
product is different, but P&L is the same.
Okay.
It is not segment wise. Then only I can segregate on diamond how much I am making, on silver how much I am making, but segment is same.
Okay. 2 quarters back, you had given some numbers around the industry, right? And you had said that the organized share is around 3 to 5% of the overall fashion industry. Can you throw some light of what could be our share of this organized jewelry market right now?
Our share in total organized sector?
Yes. In jewelry, share of organized jewelry sector.
So, I am thinking that I might be somewhere 0.25% of the organized sector in the fashion jewelry. Because if you are treating CaratLane, treating Mia, treating Blue Stone, all these people as a fashion jewelry people, then my share may be very low. Yeah. Fashion jewelry is growing, fashion jewelry will grow, and as many people will have more and more money in their hand for the disposable income due to lowering of the income tax, that first 12 lakh rupees is tax free, that is giving almost 70,000 crore rupees additional cash flow in the common man's hand, and that will definitely come in the fashion and lifestyle. And since our industry is there in the fashion and lifestyle, we will also get some slice out of that. And that is maybe the growth engine for our industry, that is a fashion jewelry industry. And increasing gold prices, fine gold prices, and compared to the fashion jewelry prices. So fashion jewelry will be more popular in the common man's mind or for the common man's hand. And so they will come more and more towards the fashion jewelry, and they will, the market will grow at a faster rate than as what we are expecting. So that I am saying that I am not going to quantify anything right now because all these effects are yet to come in the market, yet come into the picture.
Okay. And what is the inventory days that you expect?
Inventory days I am expecting around 180 to 200.
Okay. Thank you. Thank you so much for your answers.
That is including inventory lying with my FOFO. I am not talking only at my back-end store.
No. I am talking about inventory in your balance sheet. Because
inventory in balance sheet, you may see 3 times stock turn.
3 times stock turns. Okay. Okay.
Thank you. Next question comes from the line of Rajesh Singla with VPG Capital. Please go ahead.
Hi. Hello, sir. Can you hear me?
Yes.
I think very good for congratulations for the very good set of numbers. I have a few, so would like to revisit the assumptions which you have given so far and how they turn out to in terms of the numbers.
Sir, your voice is cracking.
Just a second. Hello, is it fine now, sir?
Yes.
Yeah. So my first question is like, how are we connected with PNGS Gargi Jewellers Limited, which is another listed entity, and to them, and what kind of growth are we going to see in our parent business, because that has been a major driver of growth for us. They currently have 30 stores, and if I heard you correctly, you are saying we will be adding 2 to 3 or maybe 4 stores every year for next few years.
Yes, first of all, PNGS Gargi Jewellers, we are not connected with it at all in any nature. neither cross transaction, no cross holding, not a single paisa financial transaction with each other. It's just a Gargil to Gargil. Second, your question regarding the parent business. Yes, since I am there working as a CEO also, I can comment on that. They are likely to add 2 to 3 stores every year hereinafter. This year also they have added one at Talegaon 3 days back. In next 2 weeks it is adding Thane. Another 2 weeks it will add Lakshmi Road. So this year that FY25 3 stores will be over. And if we go at your question that FY30 you are talking about, FY2030. Yes, by FY2030 we will have definitely at least 45 stores in the fold of PN Gargi and Sons Limited. 50 is a little bit higher figure for me, but 45, that is another 12 stores in next 4 years. That is 3 stores each year. FY26, 27, 28, 29. Yes, and you are adding FY30 also. So 12 stores from this, so 45 stores it will be there.
Right. So in a way we will be adding.
And as you correctly said, yes, that is going to be a main growth engine for us. We are not shy in saying that they are growth engine for us because it's their baby only and they have nurtured it. They have given the brand value to our company. And without shaking any confidence of any investor or we as a company in Gargi, we are getting their full support. Even the trade name, which is a Gargi by PN Gargi and Sons, that is also registered in company's name, not in the PN Gargi Sons company's name or any owner's name. So they are giving wholeheartedly support to us.
Right. So in a way we are saying that the main parent business, the area growth will be 8 to 10% every year, right? 3 to 4 stores we are adding.
Yes.
Having, so 8 to 10% will be the space area growth for the main parent business, right? Every year.
Yes.
Okay. And so on top of that, so we are also saying that we have 10 exclusive. I think we will have around 14 exclusive brand store by the end of this year.
Yes.
And those every year for exclusive, right? So that is also.
Next year we are planning another 10.
Yeah, another 10. So that is also a very strong growth over 14 exclusive brand store. I think and more, it's around 8% store exclusive brand store growth. So the space area growth in your exclusive brand store is also going to grow by 80% in your exclusive brand store. POS shopper store could be like muted. It's a very small business. Anyway, that probably your area growth is likely to grow very strongly as you're also growing, and your exclusive brand store is also going to grow by around 70-80% from the area side of the business. And if I remember correctly, you also mentioned that your organic growth could be on your parent business 10 to 20%. It could be 20%, it could be 10%, or it could be 15%, right? So that gives us area plus.
Your voice is cutting again.
Mr. Singla, sorry for interrupting. Please come closer to the phone and speak because we are. We cannot hear you, Mr. Singla.
Is it fine now? Hello?
Yes, please go ahead.
Yeah, so I think you space.
Mr. Singla, sorry for interrupting. We cannot hear you.
Singla ji, should I reply your question to the extent of what I have heard from you?
Yes, sir. Sure.
So, you are saying 10 to 20% growth will come from our parent company's shop or the location, which is at current 33 locations at the end of this year. Out of that, 3 will contribute next year full year, and next 3 years addition will contribute partially for the next year and partially for the subsequent year. Even if we go at that 20% growth, that substantial contribution from their side to the top line will be definitely there. and we are confident, and we are not shy to say thank you to them or to accept that they are giving us boost in our top line. Secondly, you said that we are doubling our number in our own store from 10 store current, 4 additional coming up, so 14, and another 8 to 10 store getting added in next FY. Yes, that also will add substantial top line to our company. As far as percentage distribution for own store, then PNGS, SIS, then shopper stock, instead of that, I will prefer to talk about the company as a whole. And as a company as a whole, yes, I am confident that we will keep minimum 30% growth rate, which is there in the market. Plus, if that additional cash flow, which is going to remain in the hands of the investor due to change in the income tax rate, which is to the tune of 70,000 crore, plus 8 pay commission is also coming in next 15 to 18 months. And government is expecting 2,25,000 crore rupees to be pumped in the market through the increased salary. All that is going to boost this jewelry market and fashion jewelry market at a very large. And we are there ready to take advantage of all these things. We will be nowhere back, and we will be at the front end only, and we will be taking all the opportunities and all the benefits which are coming out of this increasing customer base, increasing customer demand, and we will see that company will get benefited out of that.
So we just have one question on all these. So for your sorry
for interrupting. We cannot hear you. I would request you to disconnect your line and reconnect and fall back in the queue. Thank you.
Sure. I will join the queue back again. Thank you.
Our next question comes from the line of Nimish Kala, an individual investor. Please go ahead.
Hello, sir. Congratulations for your excellent set of numbers.
Thank you.
I would like to ask a question that as you have mentioned that you are looking for a growth of 30% for the next 3 years. So are you saying it to be extremely conservative target, or you can grow much faster than that?
As I said, this is a normal target. I am again and again repeating that 70,000 crore, which is going to remain in hands of people due to reduction in tax. Secondly, increasing gold prices, which is creating more and more attraction for the fashion jewelry. And third is the 5th pay commission, which is coming with 2,25,000 yearly cash inflow in the system. All these factors I am not discounting in this 30%. This 30% will be normal, and over and above all these positive factor which is there for our industry may push that 30% to substantial respected higher figures.
Yes, sir. And sir, what do you think about the sub-brand that we have recently launched, which is called Utsav? What do you think its contribution will be in the coming years? How do you see it unfolding?
I generally avoid to comment on such things because it is launched just 7 days back. I am not having any idea what it will contribute in these first 2 months' time. But yes, I know that this industry is very big, and people want branded and good quality product for this event-based jewelry, because nowadays more and more events are coming like Mehendi, Sangeet and all these things, even in the middle class people also. And for all these events, these people require this kind of jewelry, which is just almost a one-time use kind of jewelry. But they want some branded, some good quality. Even though it's a one-time use, they want it to be multiple time usable, and for that they depend on the brand and the quality providers like Gargi, PNGS Gargi fashion jewelry, and so we have entered in that market. Presently, we have entered in that market only on online basis. Subsequently, our exclusive brand stores, which are not in the PNGS premises, that is SIS with PNGS, there also we are going to start presence of this jewelry.
Yes, sir. And sir, my last question is, what do you think the online contribution will be in the coming years?
it has gone up from 2% to almost 4.25%. That is doubled in last 1 year time. And I am expecting in percentage-wise, it should reach to 6.5%. Again and again, I am telling you, this is with zero cash burn.
Yes, sir. Okay. Thank you, sir, for answering the question.
Thank you. Next question comes from the line of Rahul Kumar Paliwal with Shifa Family Office. Please go ahead.
Hope I'm audible.
Yes.
Congratulations, sir, for consistently delivering the surprises for every stakeholder, from earning to the category innovation like Utsav. So I think you have articulated a little bit about Utsav. Can you share a little more about what is the inspiration behind Utsav? Is it like a new category where you want to club, and how it is driven? Is it like through consumer feedback or identifying market gaps, or desire to create a new category, or is it reflecting Gargi's ROI strength in terms of competency? So a little more on Utsav and how you envisage it evolving.
In your question, you have given all the characteristics that what Gargi possesses, and that only has induced us to introduce this Utsav also. That yes, we have got ability to deliver, we have got ability to create ROI, and we have got ability to crack the market with good analysis about the market. And yes, we have analyzed the market. Market is demanding this kind of jewelry, and this kind of jewelry is there very well received by the market from various supplier or the various chain stores. And we have seen the growth of those stores, and we thought that with the customer inquiry which is coming repeatedly, that why this kind of jewelry you are not keeping. You have got good brand, you are giving good quality, good finishing. We expect this kind of jewelry also to come with us for our purpose. So we decided to introduce this jewelry. Only thing we had researched and find out the good suppliers and good assemblers who can create a quality finished jewelry. We are giving good commitment regarding the polish and finish. And then we started. Not only, even we decided to launch in on 1st January, but for some our internal purposes that we were not satisfied with certain things, we delayed it and we launched on it on 1st February, because we don't want to compromise on any front. And that's why we launched on 1st February. And yes, we are confident that it will give us good returns and good top line. And as you said regarding ROI, yes, it will contribute good ROI to the company's bottom line, even though top line contribution will be low as compared to the diamond jewelry or the silver jewelry. But bottom line percentage contribution will be higher.
Great. My other question is about industry trends. So what do you see the most significant upcoming challenge in the fashion jewelry industry? One thing is like the space is getting crowded with the deep pockets coming in. Another line I can add is like about, are you giving a rethought upon lab-grown diamond category, given the Trent and Tata getting entered into the space? Maybe you can consider lab-grown not as a diamond, that is as a stone in a fashion category space, similar to what you're doing with the brass, silver, and other material. So how do you look at this category and challenges in the industries which you envisage?
I cannot take names of the companies just like you, because I have got certain limitations, but whoever is introducing lab-grown diamond, just now you referred, they have got their one very label-friendly ready-made garment store, as well as very premier and premium quality garment store also. So they have got both the ends. So same way that house has got real diamond, real gold, as well as right now, as you said, this lab-grown diamond. In our basic thing, as a PN Gargi's son, we are never thinking about the lab-grown diamond. Lab-grown diamond in the category where we are dealing, like a small diamond studded in the gold, which are ranging from 1 cent to 15 cents. In that category, lab-grown diamond cannot compete with the natural diamond because price difference is not much. Secondly, the cost of setting of this diamond, irrespective whether it is a lab-grown or the natural, that is not differing. So, lab-grown can make impact on the loose diamond, right? Like a 1 carat, 2 carat, 3 carat, bigger size diamond. But they cannot impact on the smaller size natural diamond as far as pricing is concerned. So, why to give lab-grown when, say, at same price or nearby price, natural diamonds are available? So, we are never going for lab-grown. And in case of that Utsav versus silver jewelry or the real gold jewelry, that Utsav jewelry are altogether different class, and we are right now catering copper and brass jewelry in our brand store. But this Utsav jewelry is something bulky jewelry, which is like a temple kind of jewelry or the south kind of pattern, which is a bulky jewelry mainly. And that is not right now in our fold or in our catalog, in our design. So we are adding that. That is not something which we don't have. Right now we are dealing in copper and brass jewelry, but it is a delicate, smaller size tops or the smaller chains that we are dealing. Now it will be a bulky jewelry which is used for the events like Mehndi, Sangeet and all these things.
Got it. I would club my last two questions together. Can you share any experience where a significant setback or unexpected challenge reshaped your leadership approach and overall business strategy since the beginning of the Gargi? That is one. And second is about in line of impressive growth in sales and profit. How is this growth influencing your working capital management, including the liquidity, specifically too during period of expansion? Of course, we have the cash in which we collected through TIP, and including with that is a question about in a jewelry space, creative artistry meets the commercial pressure. So, how do you navigate the balance between fostering creative expression and meeting the financial imperative of the running a business?
Very really speaking, I don't get your question.
Okay, so
make it some simple. You must be a finance person, but make it simple for me.
Surely. So more, I'm talking about the kind of growth we have. It has happened.
We will take and I will give you 2-line answer, and then you can continue with your sub question. Continue with the first part.
Okay. So my first question is about since the beginning of Gargi, have you experienced any significant setback or unexpected challenge? Which has
I am getting very positive surprises day after day, but I have not seen any setback or anything till date.
Okay, and the credit goes to the legacy.
It goes to my investors and customers.
Appreciate. I conclude my question here. Thank you so much, and wishing you the best.
Second part.
Okay. Thank you. Next question comes from the line of Pibor Halan, an individual investor. Please go ahead.
Thank you for providing me the opportunity once again. My question is, so what is your expansion strategy for the next 3 years? Is it going to be led by own store expansion and PNGS expansion, or is there anything? Will there be anything more to it?
No, these are the only two options right now in the market. Either I have to go through SIS or through my own brand store or the franchisee brand store. SIS, yes, whatever PN Gargi funds will expand, I will have SIS at their every place. And that will definitely contribute me good contribution in my top line. Regarding the standalone store or the brand store or the franchisee brand store, I will go with the selectively. I need to survey the location. I will see the market. I will see the potential, and then I will decide where to set up this store. Right now, we are in mode to expand pan India. So we are trying to expand everywhere. Right now, as I told you in my earlier question answer, that we have appointed 2 exclusive persons just to look after the distribution channel. Either it will be through our own store or the SIS or the own franchises, whatever it may be. And they are tapping out the potential people who can take the franchises in different states, in different locations. I cannot spell out you the exact location or the city name and all these things for two reasons. Because if that doesn't happen, I am giving you wrong promise. And second, if I tell you this is going to be a public document on the exchange website, so my confidentiality will get breached. And so I am not in position to explain you the exact locations or the cities or the area where right now we are surveying or we are tapping the market and finding out the potential. But yes, we will find out potential pan-India, and it will be the mix, SIS with PNGS, SIS with other options, and standalone store. Either it will be a brand store of own company run or franchisee run.
So out of the current 14 of the brand stores that we have, how much is our own and how much is franchisee?
5 are our own.
All are our own, right?
5.
5 are our own, and the balance 9 is franchisee.
Franchises.
Okay. And can you tell me what is the standard square feet of our own stores versus the PNG SIS?
No, I don't get your question.
What is the standard square feet size of a store?
Standard square feet size of store for franchisee, it is around 400 square feet. Minimum size is 250 square feet, which is required only for silver and brass jewelry. If he want to go with the diamond jewelry, then he requires 450 to 500 square feet.
Okay, and what about PNG?
PNG sons, we cannot dictate them that how much space they should provide to us. They are providing us reasonable space and at a prominent location within their branch.
And what is the approximate revenue per store that we get from our own store and from the PNG SIS store?
I am not calculated because all these my own stores are young stores comparatively. Then PNGS store, they are scattered in tier 2, tier 3, tier 1 city. So if I go and just average it, you can say around 2 crore rupees per store turnover is there from PNGS. But you may find that there one single store is also making 5 crore rupees, and some other store might be making only 50 lakhs to 60 lakh rupees a year.
Got it. Okay, I think that's it from my side. Thank you.
Thank you. Next question comes from the line of Kiran Paranjpe, an individual investor. Please go ahead.
Yeah, thank you for taking my follow-up question. Just have a quick question related to the preference shares. I believe the approval for trading of the shares came on 27th September, and I believe there is a 6-month lock-in. So does that mean that 27th March, these shares, which is 7,29,000 shares, would be available for trading, right?
Yes.
Okay. Just wanted to confirm that. Thank you. That's all from my side.
Okay.
Thank you. Next question comes from the line of Rajesh Shingla with VTG Capital. Please go ahead.
Hello, sir. Can you hear me?
Yes.
Yeah. Hi. So just continuing with the previous question which I had earlier. So this 200 crore sales target which you are saying by FY28, that is for the B2C sales, right? That's what you're talking about.
Yes, definitely.
That is B2C sales. Okay. And also, can you please highlight the current inventory level probably with the FOCO franchisee could be around 40 crore kind of level. So that inventory level will remain stable or it will grow with the sales growth?
It will grow if their SIS grows. PNGS SIS it grows, that inventory level will also grow because more inventory will be required by them.
Right. And the standard inventory days you mentioned earlier would be around 180 to 190 days, right?
180 to 190 days, yes. That much required period is there for turnaround. But if you see my balance sheet inventory is just 20 crore, and if you find out that 100 crore top line, it is of 5 times.
Right. So with the 200 crore B2C sales in FY28 and around maybe 50 crore of inventory with the FOCO, so probably we'll do around 250 crore kind of sales in FY28 on a total basis.
Yes.
Okay. Thank you, sir. Thank you very much.
Thank you.
Thank you. Next question.
I think that time is limiting us. So should I conclude the meeting?
We have one question left.
Okay, we will take that.
It's from the line of Sharat Anuragi, an individual investor. Please go ahead.
Hello, sir.
Welcome.
Yes, congratulations on great set of number. I'll just quickly go through the question as the time is limited. Regarding the Utsav jewelry, I wanted to know what is the estimated market size for this kind of jewelry?
No, I don't heard you properly.
So what is the estimated market size for the kind of the jewelry that Utsav will be entering in?
Utsav kind of jewelry, there is no organized market as on date. Very few players are there, but they are also in a private limited mode. So their accounts and top line figures are also not available. But as a rough estimations are there, this fashion jewelry market size is around 10 to 12,000 crore rupees.
Okay. And the margins in this kind of jewelry, are they similar to the jewelry you are currently
Those varies with the quality, but for us, it will be around 30 to 40% on the gross level.
Okay. And sir, I wanted to know how are the designs differentiated for the items that are available in the North region, in Delhi, or Indore? How are they different from the designs that are available in Maharashtra? Are they similar or they are?
They are generally similar because temple jewelry is same pan-India, Kashmir to Kanyakumari. Our south designs are same pan Kanyakumari to Kashmir. Then Rajkot jewelry is same pan-India. So there is no differentiation area-wise. Little bit differentiation is there, but major differentiation is not there when it comes to the event-based or fashion jewelry which is required for the Sangeet or the your Mehndi kind of events or the Shadi, uski Barat and all these kind of events. Generally, that bulky jewelry is used.
I meant to ask for the Gargi jewelry, sir.
Huh?
I wanted to ask this question for the Gargi jewelry. Is it same for the Maharashtra and the Delhi region? The designs are the similar?
For Gargi, designs are pan-India, those are same. Because it's basically fashion and design which we are selling. And generally in this fashion jewelry, there is no bulky designs at all. Those are the very delicate designs. So all the designs which are available from Kashmir to Kanyakumari are same.
Okay, sir. And just the last question, sir. I wanted to understand the same store economics a little bit in detail for the EBOs. And I understand that the branded stores are very new. So have you set any targets or maybe estimates on what would be the internal target for revenue per store or break-even period, those kind of metrics?
As far as store economics are concerned, you can come across my people who are giving you the franchises and all these things. They can explain you economics in one-to-one basis. Again, as I said, this is going to be a public document on the website. There I cannot open my business confidentiality. But yes, if you come across my people, they will definitely explain you how to what extent you need to invest, in what period you are likely to get your money back, and in what period you will start making a BEP and earnings on in that store, those stores.
Right, sir. Understandable. Thank you very much. That's it from my end.
Thank you. Ladies and gentlemen, due to time constraints, we have reached the end of question and answer session. I would now like to hand the conference over to Mr. Amit Modak for closing comments.
Sorry, Mr. Jain, I could not take you on the line because of the limitation of the time. I am thankful to all people who have participated in the meeting. and I can commit you that the company will grow as it was growing earlier, and it will deliver as good as numbers and results and performance as it is giving it for last 30 months, more than 30 months. And I can give you confidence that we are always working hard for giving you good returns and good performance. To that extent, I can commit you that PNGS Gargi Fashion Jewellery Limited always concerns about their investor and always concerns about the satisfaction of their customers. Thank you.
Thank you. On behalf of PNGS Gargi Fashion Jewellery Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.